when will this crypto crash stop? That's the question, right? Buying the dip is nice and well, but when it continues dipping all the time, it's not that much fun, right? So how can we potentially find out when things turn around again? That's a question here. And we are going to look at different models. We've got different charts that historically work pretty well for Bitcoin. And Bitcoin in the end is the proxy for all of crypto, right? You want to know where is Bitcoin going, where's Ethereum going, in order to then get a gauge if altcoins can also go up. So let's not waste any more time. Let's jump right in. Hi, so there are different models that try to figure out, are we currently low or high on Bitcoin? The most straightforward way, of course, is just looking at the price data, right? Looking at moving averages, for example. And over here on the website, lookintobitcoin.com, the link is also in the video description, we can see Bitcoin on a long-term chart, right? This is a logarithmic chart, so this is a 10x with each increment over here. We see this starting at around 30 cents or so in 2010, all the way to the current price, which is 34K in May of 2022. And so this model over here, it shows the 2-year moving average. So that's here the green line. And in red, we see the red line, which is 5 times that moving average. So it tells us some kind of a story where in the past we might have been pretty cheap, right? A time where we might have wanted to buy. And we had this over here in the initial crash. We also had this here during the Mt. Gox depression. And then, of course, after the final capitulation in 2018. And also shows us the times where we might be potentially very heated, right? So the peak in 2011, one in 2013, another one in 2013, then of course the 2017 peak, and the recent peak that happened at the beginning of 2021 actually did not reach the upper band. It just scratched it, right? It was pretty close to it. And so this is pretty useful, as in if you're buying Bitcoin over the long term, right? If you dollar cost average in, if you buy a fixed amount every month, maybe it makes sense to buy more when this value is pretty low, right? When the price is below the 2-year moving average. Maybe during this time, it makes sense to double or triple the normal dollar cost averaging amount. Because that's then when, in case you hold for long enough, you might make the real return on investment. And currently, this is the very interesting story. We have just come below that 2-year moving average. So we are entering an accumulation time. It doesn't mean it can't fall any further, right? So when we had this final capitulation here in 2018, we went below that moving average, which was at the time at around 5,500. And then we fell further all the way to 3,200. So we had maybe an approximately 40% drop after that again. But this is not a model to try to perfectly time the bottoms, right? It's just a model that tries to find out when are we, comparatively speaking, relatively cheap. And we are now just entering exactly that time again. We are entering strong dollar cost averaging territory. And so that's the hard thing about it, right? It's very likely that you have entered crypto at the beginning of 2021, right? This is where the marketing was at its height. This is where the altcoin trading started happening. This is where a lot of new people got onboarded, basically because of this rally after the Corona crash, where we went from 3K, 3, 4, 5K, all the way then to those 60K. And this was pretty impressive, right? This was more than a 10x move. A lot of attention. But unfortunately, when there is a lot of attention, it also means it's hard to find new people that can double the price again and can double it again, right? Once there's a peak in attention, it's unlikely that we are going to continue to shoot up. You rather want to buy when people are depressed, right? When people say Bitcoin is going to zero, crypto is not going anywhere, that's when you want to buy. And we don't see this yet. So this is the discussion that I find so interesting, right? When there was really big depressions, like in 2018, people really said crypto is over. It's just the last bubble that's popping. Crypto is going to die. And there's no turning back. This is pretty different to the current sentiment, right? There's more or less still the sentiment that this is just another bear market. We are going to recover from this. There's no real capitulation here, right? There's not the idea floating around that crypto will crash and burn and never recover. And so I think this is a good time to DCA in, but I also think we still have to be prepared for another 30, 40, 50% drop. There needs to be something that accelerates the sell sell off, maybe some kind of black swan event, maybe the Anchor protocol suddenly getting a lot of troubles with their reserve, and maybe different shockers that might come from Tether, maybe regulation that forces Tether to further disclose their commercial papers. Whatever it is, maybe another shock has to come in order to really see the final depression, to really see people saying that crypto is not the future. That's currently not what's happening. Now, to get a better feeling of an absolute bottom, we probably don't want to look at the 2-year moving average. We want to look at the 4-year moving average, because that historically was a really, really good indication of where we might bottom. And maybe this is related somewhat to the 4-year cycle, right? To the 4-year halvening. It could be a psychological reason for that. Of course, we never know if these lines continue to hold, but let's zoom a little bit in here, right? This was the bottom after the Mt. Gox crash. This was also the bottom after the final capitulation in 2018. It was also the bottom here during the Corona crash. So the 4-year simple moving average, or the 200-week, right, roughly 4 years, it is a pretty good gauge of how much volatility in the worst case we have to stomach. And these kind of movements, they get amplified with the altcoins, right? When Bitcoin is going down to this level, which is currently, by the way, 21.7K, when it goes down all the way from the current level to over here, and so Bitcoin might be losing 40%, then the altcoins are going to lose 60 or 70%, right? There's this leverage effect. When Bitcoin is coughing, then the altcoins, they catch a cold. So simply be prepared for this, right? I think in this current market environment, which is not bullish at all, right? It is pretty bearish. I think the only investments that make sense holding are the ones that you're willing to hold over the next bear phase, that you're willing to accumulate, that you think they will still be around in 3 or 4 years from now. Because you can't really afford to buy something now and then have to sell in 2 or 3 months when all of crypto is going down. You want to be safe, you want to be convinced in your investments, and you don't just want to ride momentum. At least in this current market environment, I think the risk is simply too high. Attention on crypto is low and the price declines, but still hasn't found the final bottom, at least what was historically the final bottom. Now there's this stock to flow model, right? Something that's been cited all over the internet. That's basically what gets most people excited about Bitcoin. Less and less issuance in Bitcoin, meaning the new supply gets cut in half every 4 years, makes Bitcoin more rare, which in turn means the value of Bitcoin should go up, right? When there's less issuance, when there's less inflation of something, then in theory, its value should go up. And this is what we see here modeled with the stock to flow value. So what the model here is doing is it looked at different asset classes, so at gold and silver, and it looked at how much new issuance is there every year. And then it looked at that issuance and it put it in relation to its market cap. Thus, there's this inverse relation, right? The more issuance there is, the lower the market cap is because it's less rare. And so since the rate of issuance declines over time for Bitcoin, the modeled price of Bitcoin shoots up. And this is a pretty extensive move, right? This is almost a 10x with every halvening, meaning the idea is that in around 2 years, when the next Bitcoin halvening will happen, that then we will see prices of around 700K. Now, what's important to note here is that this model is only looking at the supply, and it basically assumes that when the supply is reduced, that the demand will come automatically. But price is the result of demand and supply, right? So without the demand, we can't push the price that high, even if the supply is lowered. And so at some point, of course, this model has to break. These halvenings, they will continue for quite some time. I think for like the next 100 years or so. Every 4 years, we will get another halvening. We'll get more and more rare. But we can't 10x for another 100 years every 4 years. Bitcoin would be way too large in terms of market cap. So at some point, this model has to break. Has it broken already with this relatively low price compared to its model here? So the model price is currently roughly double of what the actual price is. Has it already broken? It's hard to say, right? We've seen similar kind of volatility in the past. We've seen massive overshootings and we've also seen undershootings over here. So nothing is yet decided. I simply think when investing into Bitcoin, it's important to consider that you shouldn't put all of your hopes in this model, right? It makes sense to look at several different factors. The stock to flow model gives a lot of hope. gives the hope that we might reach 1 million in one Bitcoin at some point in time. And if we extrapolate very much out in the future, I think this will happen, right? Because fiat is unlimited, Bitcoin is not. But if that million for a Bitcoin will happen in like 4 or 5 years, or if it will happen in 50 years, nobody can tell. It really depends on the demand. The difference between the modeled price and the real price is just the demand. It's not the supply. The model only models the supply. And so what I think is a better approximation of the growth of Bitcoin is simply to look at how quickly did it grow in the past and in what kind of fluctuation room was it in the past. And this is what the logarithmic growth curve is for. So again, we've got our long-term Bitcoin price data. And in here now, we calculate something called a logarithmic regression line, meaning we've got our price and then we try to find the line, the logarithmic line, that best represents these price movements. So mathematically, the way this works is you measure the distance of each data point to your line, and then you try out different variables of that line in order to minimize the sum of those distances, or the square sum of those distances, right? So you square the differences to the line, you try to find the best fit mathematically to all the data points, and based on that best fit, we then get this line here, this middle line. And what we see at the top and at the bottom here are simply just buffers from that account for these various boom cycles and bust cycles, right? So what we can notice is that in the early days, of course, when Bitcoin was way more risky, when there was way less capital in Bitcoin, that the growth rate was really, really steep, right? So this line was really steep. People made a lot of money in Bitcoin in the early days, at least as a multiple on their investment. This is now slowing down somewhat, right? The slope of this line is smaller. We can also see that the trend channel itself, it gets narrower, right? So the model predicts the price with more and more accuracy as time goes on. So when we look at this then, right, this is here the Corona crash, we can see the price fell actually below the lower band. So the lower band was at approximately 7.5K. The price though went down to 5K. So we are around 30% below the lower band. Currently, we are again very close to the lower band, which is at 32K. If we assume that a black swan event will come, which is a funny assumption, right? Because the idea of a black swan is that you can't actually predict it, right? That's why it's called a black swan. But if we think maybe something catastrophic might happen, similar to the Corona crash, then the bottom again is 1/3 below the lower band, meaning again at around 23K, maybe 22K, something in that area. So these are the kind of ranges we are currently playing with. Now there's one more chart to come. If you so far enjoy this kind of content and you haven't yet subscribed, don't forget to do so. Of course, a like would be appreciated as well. Thank you. So this is the last chart I want to show you. This is the realized HODL ratio. Now what is that? It looks at the blockchain data. It looks at how much profit was realized, or what's the last price when a Bitcoin moved. And how is that in relation to the overall market cap? And when we look at this metric, we can see it mimics these booms and busts pretty closely. So we can quite well figure out where are these bottoms here, and we can also see the heated periods. That being said, right, using this metric, we wouldn't have sold at the beginning of 2021. So we hadn't been as heated in 2021 compared to the boom in 2017. But still, for the floors, it gives a pretty good range. And currently, we are not yet as low as we have been in the final capitulation of 2018, right? So what happened in 2018 is that we had a pretty clear floor, actually. We had a pretty good floor here at around 6,500, and we didn't go below this price floor for quite a while. So we stayed there, and a lot of people were speculating on the final crash being over. But then what happened is a real capitulation event where it basically went down another 50% or so. So this is then where we also got in the green area for the realized HODL ratio. Currently, we are not yet there. So this is what I mean by that, right? So we are low. It is a good time to dollar cost average in if you still have money, right? I hope you haven't just spewed it all on altcoins and you are down now 90% without any income to further put into crypto. If you're in that kind of a situation, then you've got a problem. I hope you're not yet too discouraged and that you're okay to further dollar cost average into the assets that you're long-term bullish in, and then be prepared to potentially still get a capitulation event, some kind of a black swan that could push us further down. Nobody knows if that happens, right? So that's why we also already need to dollar cost average in right now, because we really don't know when the final capitulation happens. But be prepared to not be completely shocked when it happens, because it's a real possibility. Simply be cool, simply don't be fearful. Do the exact opposite of what the rest of the market is doing and buy up the fear during such an event when we are again low in the realized HODL ratio. Now, in case you haven't yet joined our public Telegram group, feel free to do so. Simply search for Bitcoin Strategy Channel within the Telegram app. And if you're interested in a more detailed discussion around crypto, around different projects where you can still make money in a bear market, and if you want to ask me any questions, you can also check out the premium membership. The link is in the video description. If you're wondering what the on-chain data of crypto currently says, don't forget to check out this video over here. A lot of value there as well. So see you in that video, and thanks for watching this one. Bye bye.